Hey everybody, good morning. It's about 8 o'clock in the morning here on the 22nd of August. Today is Thursday, and I want to do a real quick update on both Bitcoin and the S&P 500. I've also been doing some updates on TradingView. If you're interested in quicker burst updates, I'm trying to do a little series on TradingView where I'm just doing an analysis in 5 minutes or less. So what I'm going to do is kind of recap a little bit of what I was discussing yesterday and talk a little bit about the changes from price action over the last 24 hours. Before I get into all this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and take a look at the S&P 500. I'm on a weekly time frame here. In contrast to any updates that I do on TradingView, I'm actually able to show indicators on here on YouTube for you. So you'll be able to take a look at the Wavemaster indicator as it pertains to the price action that I'm discussing. So as we take a look, I'm focusing on this channel that has been defined going all the way back to the early 1900s. So we've got a nice dominant pivot high, couple dominant pivot lows down here that we're focusing on. But fast forwarding to the current price action that we've got here in the recent 2-3 decades, of course we've got that same dominant pivot high here and a dominant pivot low after a large correction. Now obviously we haven't seen a major correction like this since the 2008 housing bubble. So let's see here. I've got a comment here asking if I could turn up the volume. So let me see if I can do that. So I'm not sure if this is going to help, but hopefully that does. Let me see. Just check one more thing here. So yeah, hopefully that is a little bit better. So yeah, again, we're looking at the S&P 500. We haven't had a major correction like this since the housing crisis. And so now that we are here, with the price actions basically just moving upwards, we've had some corrections that are, of note. But generally speaking, the largest correction that we have seen is the COVID crash in 2020. And, we really haven't seen anything significant like that ever since. We did have a bit of a bearish move in 2022. It came down to an area where we had like a top, or roughly a top, before the COVID crash. And then, of course, we have a nice clustering right here as well as we were trying to break and make new highs. So, this correction is the most significant that we've had since COVID, but even then it's not really all that much. And here we are, we're moving upwards, we're continuing to move upwards. And, this does look like kind of a corrective move moving up. I don't see this as a very impulsive move. I see from this wave A right here, I see really an A, B, and working on the wave C. I would see that there is a potential for a top in the end of September, assuming that the markets continue to move upwards. So let me move to a daily and get to my point. My point is, we've got the 50, the 100, and the 200 daily moving averages that are going to continue to be acting as support as long as we continue to trade above those moving averages. So what we saw, we saw back here at the end of May, kind of a test of that 50 daily simple moving average. And then we saw some support here at the 50-day simple moving average. And this was back in late June. Let's see here. Late July. And then, of course, the very beginning of August, that first day of August, we tried to find some support there. And obviously it broke down. Found some support at the 100 and then broke down. Didn't get anywhere near the 200 daily moving average. Now, if you take a look at the Wavemaster, what we saw here is we saw areas where we should have gotten a bottom. Right? If you look historically speaking, every time that you've got an area where these daily green waves have gotten down here into these extreme oversold positions, it's been a decent time to be a buyer. So we've got it here, we've got it here. If we go back, we've got it right down here as well, and then we've got that same thing occurring down here. Now, if you are more of a longer-term trader, you're not expecting to get the quicker gains. you're going to be looking for a recovery above that 50 simple moving average. You see we had a little bit of a rejection here, but once we got above it, we continued to rise significantly. Same thing back here. We broke down below, so maybe that's a spot for you to take profit. We get back above it, you take that position, and then it moved up significantly. So that 50 simple moving average on the daily time frame is very important. And of course, as we were discussing on the Discord, the 50 daily exponential moving average is also important as well. I don't have it on this chart right now, but it is of course important. But mean reversion, so these moving averages are going to continue to move as long as the price action is trading above or below. And it typically tends to be a little bit of a magnet. So the price action does tend to try and gravitate back to it to test that level before we've got new money entering the market to cause that price to go up. One thing that I'll say is, mean reversion doesn't necessarily mean that everybody is selling here and everybody is buying here. That's not what that means. So take Berkshire Hathaway for an example. One of the reasons why they outperform most traders, most institutions, is because they have so much cash on hand, where once we do have a nice trending move, they don't close out their positions, right? Those larger institutions, that's not what they do. That's not how they manage things. They're going to wait for a pullback to test moving averages or a pullback to test, whatever their metrics are, and they're going to inject new money into the market that's going to cause that rebound. All of these market movements are not created by people like you and me. These are created by people that are controlling billions and billions of dollars of funds, of assets. And they have lots of cash on hand, and that's what causes this to happen. So when you do see price action moving down, this would be institutions that are taking profit. These would be institutions that are closing things out. But those are not the same people that are buying down here, right? They've closed out those positions, and they're not interested in managing wash trades. They're not interested in day trading, right? They're in it for the longer term. Fact of the matter is, asset managers, fund managers, they don't do a whole lot of trading at all. All they do is they just wait for a pullback in the market to inject the new capital that they have on hand. So that's what's happening here, right? Certainly, you've got institutions that are going to be taking profit. They're going to be closing positions and waiting, or maybe rotating into another position. But once you get that mean reversion, you're going to have new money typically entering the market when we do have a move like that. And the same thing would be true down here as well. New money entering the market that's causing that price action to move right back up. These are not controlled by the same people. These are different people, different institutions that are causing the price to go down, causing the price to go up. There were a lot of people talking about the carry trade that caused this to go down because of margin calls in the forex markets that are causing traders to get squeezed out of their U.S.-based investments in order to cover foreign currency, borrowing, whatever that might be. So it's a different group of people that are causing this price to move back up. And that's something that you have to remember as you are trading, that it's not the same people that are causing these price movements. Okay, all right, so that's enough of all of that. Let's just go ahead and continue to talk here about that 50 moving average and the 100 moving average. So I'm hyper-focused right now on the 50 daily simple moving average because it's an important moving average. We've seen that there was some support here. We're back up above it. And the interesting thing about this, and if I can just zoom in here for just a moment, we had a nice gap above that 50 simple moving average. So that was your key at the time, areas where we had prior support, and then we moved right up into resistance, but then we pushed right through that resistance. That was a very bullish move. That was a bullish move, and we have seen continuation off of that. So the likelihood that we do continue moving higher, it's really pretty good. And what I can see happening here, we've got an area here at this 1618 and this negative 1618 extension. It's going to be right around 5,900. Are we going to go up to 6,000? I don't think we are on this current move up. I think we're likely going to get a rejection somewhere around 5,900. Now, certainly we can go further than that. We take this one day at a time because I am a trader. I do have investments that are long term, but I always keep an eye on the market to to keep an understanding of the way that it feels and the way that it breathes and the way that it lives. So I always try and keep my finger on the pulse of the market in general. And I think right now, from where we're at here, it's very high probability that we are going to see new highs. We're not very far off of it right now. And SPY, it looks like futures are going to be gapping up a little bit today. So I wouldn't be surprised to see price action, at least for the S&P 500, to go up to about 5,900 before we start to see a major decline. And that's what the signs look like to me. It looks to me like, yeah, we've got a V-shaped recovery here, but I think that we're probably going to see some exhaustion up here, and likely we're going to see a move to the downside. If we take a look at the wider time frame here, kind of zooming out a bit, I do think that we are in the middle of an A and then a B and then coming down for wave C. Now, where is that wave C going to land? It might come only down here to maybe 4,000. It may not even go down there at all. Again, one day at a time. Not necessarily saying this is my primary projection. This is just what I'm looking at right now. If you take a look at the Wave Master on the daily, you've got the yellow and the red wave that are continuing to move down just a little bit. They're entering the neutral zone right now. You've got the weekly, which is this white one, this white wave. This is also kind of flatlined up here in this extreme overbought territory. And you've got the green wave, which has completely reset. It does look like it still has some room to go, so I'm going to give it some time. I will give it, a couple weeks. Potentially by the end of August, we're probably going to start to see signs of a little bit of, consolidation. I do think over the last couple days, the market has been consolidating for the next move up. So likely what we're probably going to see is a little bit of this, probably just very modest price movement to the upside once we get to that all-time high area. So let's talk about Bitcoin. Okay, so here at 12 minutes and 16 seconds, thanks for hanging in there with me here. So looking at Bitcoin, we've been talking about this on TradingView. One thing I'm going to say is that we've got a couple things that we have to focus on. All right, and right now the candle, it only looks okay. It does not look fantastic, right? All of these little orange circles are focused around tests of moving averages, right? Most of them are related to testing this green moving average, which is the 50 daily simple moving average, right? We've got several tests of that all the way back since the beginning of August. August 8th, we had a test. We had another one here on the 11th. And then we had another one here on the 14th. We had two tests over the last 2 days. So let's just zoom in on that here for just a moment. So we had a test of that, a swift rejection, but then we've had follow through, right? We did have some follow through on that yesterday. But one thing I'm going to say about the follow through is it stopped at that 50 daily simple moving average. So from a mean reversion standpoint, we have satisfied the requirements for mean reversion, but we have continued to get rejected off of that. And today's candle, it doesn't look bad. It really doesn't look bad here at 61,150. The areas that I'm interested in, if we can get above, and really I'm looking for a daily close above that 50 daily simple moving average. My bullish stance, confidence-wise, will increase if we can close above that 50 daily simple moving average. Once we get there, we've got a lot to contend with here between 63 and 64,000. That's going to be where the 100 and the 200 daily simple moving average are. And as I was stating on the TradingView update yesterday, we're in very close proximity for a death cross on the 100 and the 200 daily simple moving average. So these moving averages are also going to act as a magnet for a price action to go towards, assuming we can close above that 50 daily simple moving average. If we can get a daily close above that, which of course you can see here, we still have 11 and a half hours to go, and we still have the entire cash session of the stock market to cause more volatility. But as long as we can close the daily above that, I would say that the first stop is going to be here, And if we can get above here, then I think we can start to talk about the potential for new highs. But what we really have to get above is the areas where we're seeing, we've got this low, we have now a lower high, then we've got a lower low, we've got a lower high and a lower low and a lower high and a lower low. So if we can continue to move up, I think it's going to be extremely important that we overtake this level right here. It's so important that we overtake this level right here, because if we can overtake this, that is no longer a lower high that we are faced with. We are now looking at making new highs. So if we can get through all of this resistance and we can pass this level right here, then we can start to talk about a move back to all-time high. We can start to talk about a move even up to maybe $85,000, right? So we've got this 1618 here at about 83,950. We've got this 1236 here, which is at 85,427. So this is going to be the area that I'm going to be interested in to probably take a little bit of my spot Bitcoin off the table. I am interested potentially in reducing my spot Bitcoin holdings, at least for the short term, until we can get above this 50 daily simple moving average. But up here, I'm interested in shaving some of that profit, maybe rotating it into some alts. We will see, we'll see what happens, if and when we get there. But ultimately, I'm going to be looking for a move up here to about 94, 95, 96,000, assuming we can get through all of this. Again, as I was mentioning earlier, one day at a time, and don't rush things. The last several weeks have not been great for leverage. There have been times where you could be getting some great scalps, right? So great scalps have been had off of that 50 daily simple moving average. We had a rejection here that was, a 4% drop. We had a rejection here, which was another 6% drop. We had a rejection here, which was even more, 9% drop. We had a rejection here. But I think the more that people start to recognize the pattern, the less likely that pattern is going to pay. So now here we are. We did have another rejection off of that yesterday, but it recovered much faster than it did the previous time. So the previous time it took 27 bars over a day to recover, and this time it took just a couple bars in order for that to recover. So the more times that something gets tested and people start to recognize the pattern, the less often that it works. So I guess short term, we need to stay above this green level right here, which we did a retest of that overnight. We need to stay above this, but really we need to get above that 50 daily simple moving average. So keep an eye on that. I'm going to go ahead and end things here. Hopefully this video helped you in some way, shape, or form. If you need access to our Discord, you can find all that information on BitDoctor.org. That's, of course, where you can find access to the indicators that I use. You can find access to all the trades that I do. We've been doing some really great day trading on a lot of different stocks, Microsoft and things like that. But if you need access to that, you can find all that information on the website. And of course, you can always send me a DM or something in Twitter on TradingView if you want to chat with me outside of Discord. And last but not least, wherever you are in the world, I hope you're having a good day and a good night and a great evening. Take care, everyone.